Let's start with these two market milestones today. Dow 44K, S&P 6, and I'll throw in NASDAQ 19. We did that at the close for the first time yesterday. But can these gains, fueled in part by Trump's comeback, continue? And if so, for how long? We turn now to our panel of experts. Mark Luschini is chief investment strategist at Janney Montgomery Scott. Here on set with us is Ron Insana, CNBC senior analyst and commentator and CEO of, what is that, IFI?
No, IFI.ai.
IFI.ai, thank you. I sense, Ron, you might want to pour a little bit of cold water on this hopium.
No, not for the remainder of the year, Kelly. I think, the markets are going to continue to discount the business-friendly aspects of an incoming Trump administration. So lower taxes, in many ways, maybe a larger package than is currently envisioned, and then also less regulation, more M&A activity, just more business-friendly activity. I think next year, and again, this goes back to 2016 in my mind, when people were deciding, do you take Donald Trump literally but not seriously, seriously but not literally? If you take him both, and you're talking about tariffs across the board, and you are talking about mass deportations, at least attempted, I think from an economic perspective, the inflationary and recessionary implications of that might be viewed differently if and when that comes to pass.
But that's not, for right now, you're saying it's, the race is on, the chase is on into year end.
Yeah, the Fed's probably going to cut again in December. So, you've got some tailwinds at your back, and the palindrome parallax that is now underway here, which will make a great movie, I imagine, someday for Wall Street. You've got all the major averages at all-time highs. You've even got the unweighted averages moving higher that are, broadening out this market. So it's hard to get bearish right here.
All right, Mark, are we replaying an old movie, or is this an entirely new movie? And what's the plot?
Well, I think part of the newness of it is the fact that the underpinning for why stocks have advanced even so far this year is the fact that the economy is in pretty good shape. We had a bit of a growth scare back in August when we had a kind of couple of punky data points come through that put market investors on their heels. But we've seen the economic surprise index move basically up at a 45-degree angle since that point in time, which has dragged 10-year Treasury yields along with it. But at the same time, it's been a boon for stock prices. So you couple that with what Ron talked about in terms of some of the policy measures that, at least at this point, are expected to be forthcoming under President Trump 2.0 in the White House. And as a consequence of that, it certainly is a setup for this rally to continue into year end, perhaps not necessarily linearly at the pace we're currently experiencing it happening. But nonetheless, I think it's a strong setup seasonally, certainly. And as well, the presidential cycle historically suggests that this is also a very healthy period of time for risk assets. But I think that can carry over into 2025. So much after that will depend on the sequencing of the new Trump administration's processing of immigration and obviously, as was mentioned again, the imposition of tariffs.
I think the most important number on Wall Street right now is not 6,006. I think it's 218.
218.
Absolutely. 100%.
What is it?
That's the total tally in the House.
What you need in the House to have control. So, Ron, my question to you is, if Republicans get 218, does that change the stock calculus?
Well, again, I think it still goes back to the same thing. That it also gives Donald Trump, the president-elect, a free reign to do anything and everything that he would like to do.
It's priced in right now, though, isn't it?
Well, it's 218 priced in. That's what I don't know.
Yeah, I would think so.
Well, it's 200, 211 right now, according to the official NBC count.
Yeah.
And there are, I will tell you in just a nanosecond here.
I mean, how many of them would have to break?
There are 24 races outstanding.
Right.
So the Dems need to kind of not quite run the table, but they need more than half.
I think it's anticipated that the Republicans are going to take the House. They have the Senate and now have the White House. The question is everything that the president-elect wants to do market-friendly? Some things are, some things are not. Some things are not Fed-friendly, which is not something we've talked about, but we'll talk about shortly. So I think the jury's out. Look, Ed Yardeni was talking about a melt-up several months ago, right here on CNBC, and we've certainly had one. And the third and fourth years of a presidential cycle are historically the best two. Typically, the first year is not among them. And so, again, typically also the Fed's tightening in the first year of a presidential cycle, which may or may not be the case next year. So I think there's so much up in the air that I'm comfortable talking about the next,
If you want to make any bets, Ron, on something being typical in the first year of a Trump administration, I will take the other side of it.
Well, yeah, I mean.